A major trade shakeup is unfolding, and its impact is reverberating far beyond North America. Canada has dropped a bombshell by proposing a staggering 100% tariff on Tesla, America's flagship electric vehicle, EV manufacturer. However, this move isn't just about targeting one company. It's a bold retaliation against former President Trump's tariff-heavy trade policies. If implemented, this decision could completely upend the North American auto market. What makes this situation even more intriguing is that Canada isn't merely putting the brakes on American EVs, it's actively rolling out the red carpet for European electric cars. This shift could deal a significant blow to the U.S. auto industry, disrupting a trade partnership that has long been valued at approximately $50 billion annually, encompassing cars and critical materials like aluminum and steel. The focus on Tesla is no coincidence. As the dominant player in the U.S. EV market, holding a commanding 70% share, Tesla is the face of America's electric vehicle revolution. A 100% tariff could inflate Tesla prices by $5,000 or more in Canada, making the vehicles far less appealing to Canadian buyers. This price hike could drive consumers toward European alternatives, giving brands from the EU a golden opportunity to gain market share. For Tesla, this could mean struggling to maintain its foothold in Canada, potentially sparking a major reshuffle in the EV market. The repercussions of this decision could extend far beyond Tesla. Investors in the company could face significant losses as sales decline and profits shrink, leading to a potential drop in stock prices. With Canada being a key market, losing sales there could disrupt Tesla's broader growth and expansion plans across North America. This instability could raise doubts among investors about the company's long-term viability, creating ripples of uncertainty throughout the entire EV sector. Moreover, the EV industry, which has been growing at a rapid pace, could face a sudden slowdown. Rising production costs and higher vehicle prices might make EVs less affordable for consumers, potentially stalling the global push toward clean energy and delaying efforts to reduce carbon emissions. Tesla now finds itself at the center of a trade storm, but the implications of this tariff could extend to the entire U.S. auto industry. Tesla isn't just another car manufacturer, it's a symbol of the global EV movement. The company aims to sell over 1 million vehicles worldwide this year, with more than 50,000 of those sales expected to come from Canada. If the 100% tariff is enacted, the price of a Tesla Model 3, currently around $40,000, could skyrocket to $40,000, could skyrocket to $80,000, putting it out of reach for most Canadian buyers. This isn't just a problem for Tesla. It could also impact other major U.S. automakers like General Motors, Ford, and Chrysler. Canada produces over 2 million vehicles annually, many of which are exported to the U.S. If this tariff dispute escalates, it could lead to factory shutdowns, job losses, and significant disruptions across the North American auto industry, which generates about $50 billion annually. The roots of this trade conflict trace back to the Trump administration's America First trade strategy, which imposed hefty tariffs on Canadian and European imports. While the goal was to protect U.S. industries, the result has been a fierce backlash. Canada, under Prime Minister Justin Trudeau, responded swiftly by imposing retaliatory tariffs on U.S. goods, including steel, aluminum, and agricultural products like beef and dairy. Trudeau also strengthened trade ties with the European Union and other nations, reducing Canada's reliance on the U.S. market. This strategic pivot wasn't just a short-term fix, it was a long-term plan to bolster Canada's economic independence. The situation has escalated further with Canada and the EU forming a strategic minerals alliance, aiming to reduce dependence on China for critical minerals like lithium, cobalt, and nickel, which are essential for clean energy and high-tech industries. This move not only strengthens Canada's position in the global market, but also sends a clear message to the U.S., fall behind on smart trade strategies, and risk being left out of the future of energy. Meanwhile, Europe has grown increasingly. Uneasy with the U.S.'s unpredictable foreign policies under Trump, particularly after secret talks between the U.S. and Russia about Ukraine excluded European allies. This has prompted the EU to pursue greater military and economic independence, further distancing itself from U.S. influence. The trade tensions between the U.S. and Canada have also spilled over into the agricultural sector, hitting American farmers hard. Retaliatory tariffs on U.S. crops like corn and soybeans, as well as beef and dairy, have driven up export costs and left farmers struggling to find new markets. The dairy industry in particular has been hit hard, with U.S. dairy farmers losing a significant portion of their Canadian customer base. This has led to plummeting prices and financial strain, pushing many small family farms to the brink of collapse. The ripple effects of this trade dispute are reshaping rural communities and accelerating the consolidation of farms into larger agribusinesses. The energy sector is another area where the U.S. is deeply intertwined with Canada. The U.S. relies heavily on Canadian energy exports, including oil, natural gas, hydropower, and uranium. If Canada were to cut off these supplies, the U.S. could face skyrocketing energy prices, factory shutdowns, and widespread economic disruption. States like New York and Vermont, which depend on hydropower from Quebec, could experience blackouts and energy shortages. The U.S. would be forced to scramble for alternative energy sources, but stable and affordable options are not readily available. Canada's strategic shift toward diversifying its trade partnerships and investing in sustainable industries like renewable energy and green technology is positioning it as a global leader in the green economy. Meanwhile, the U.S.'s reliance on protectionist trade policies risks isolating it from its closest allies. As countries like Canada, the EU, and Asian nations forge new trade alliances and reduce their dependence on the U.S., the global trade landscape is undergoing a significant transformation. If the U.S. doesn't adapt, it risks being left behind in an increasingly interconnected and competitive world.